Welcome back to the ETF Inspector. It's Friday, October 31st, a little after noon Eastern Time. And in this episode, we're going to take a look under the hood of the new fund that just got released today, ULTI. Yeah, you're hearing that right. It's ULTI, very much similar to the ULTI that you're already familiar with. It's a new product by Rex Shares, and it is their IncomeMax Option Strategy ETF. Okay, before we dig into it, just want to remind you I'm on X at ETF_Inspector1. I do deep dives into these ETFs as they come out or as they become popular. And then there is also daily coverage that I provide on a handful of ETFs as well. We'll come back to this in just a minute. So starting off, the website just got updated today. It's new. It's now available, rexshares.com. And as you scroll through, we've got a little bit of information about the fund. So they also had an article, released it today. A leading innovator in alternative ETFs, speaking of Rex Shares, that today announcing the launch of Rex IncomeMax Option Strategy ETF. So it's going to be actively managed, so not passive. It's not a set it and forget it. They're going to be staying on top of things and trading as needed, trying to capture weekly income, monetizing market volatility. If you watch this channel already, you know that that's kind of the plan with a lot of these high yield option income funds. It's a sophisticated strategy, and it is a different strategy than what we're used to on some of our other funds. So I'll get into the details of that a little bit. It's got most volatile U.S. stocks with an option strategy dynamically adjusts to changing market conditions. All right, they're looking to turn volatility into weekly income. So they are going to be a weekly payer. It says they're going to typically hold 20 to 30 U.S. equities. Currently, they have 20. Managing exposure and options positioning as volatility and market directions shift. It says, this is a quote, investors are demanding hedge fund style income strategies that can thrive in today's volatile markets. So this is basically, you hear it spoken of a lot, the democratization of hedge funds. You don't need millions of dollars to go get invested with a hedge fund company. You can just buy into these stocks and get that type of trading along with it. So that's about it for this announcement. There's media inquiries. You can contact Gregory FCA for Rex at rexfin@gregoryfca.com if you're the kind of person that likes to message these people. Okay, next, let's just scroll down through their website. We're not going to have a lot of numbers and percentages on the website yet. They just opened today. They haven't paid anything out, so they can't have a distribution rate. It would be nice if we could find somewhere their expected or anticipated or their goal percentage. They do say that their current distributions consist of 100% estimated return of capital. They haven't given any distributions, so that doesn't make any sense. Gross expense ratio of 1.25%. It's going to be slightly lower than what you're used to on some of the competition. Their strategy is an enhanced weekly income potential with active management and downside mitigation on extreme moves. So they do have some downside protection. We'll look at that as well. So it's opening up. This says as of yesterday. Basically, they started putting the money to work yesterday to accumulate the holdings within the fund so that today, when you buy the fund, it actually has some substance. It's not just nothing or a collection of money. It's actually already invested. All right. They're going to be a sophisticated strategy targeting most volatile stocks, right? We already talked about that. Turning volatility into weekly income. So his starting price was $25. All right. And there's 200,000 outstanding shares to start with a $500 million start on the assets under management. Now, I checked earlier, and actually it wasn't even coming up on here. Still not showing up. So you may have to look at your broker specifically. I'm not going to pull up my own trading account and have my account numbers shown up on YouTube. But when I checked it this morning before the market opened, it did recognize ULTI but it was not yet trading, so I couldn't do anything with that. But again, they state their 1.25% expense ratio. If that sounds high for ETFs you're used to, you're probably used to looking at passive ETFs. So your active ones are in this 1 to 1.5% range, and your passive ones are in those much lower, less than 1% ranges. You can see they've got their distribution schedule on the website. Obviously, they haven't paid anything out, and it looks like their first one will be on 11/14, so not next Friday, but the Friday after that. So you're going to get all of basically the trading from today through all of next week, and then on the following week they will announce and pay out their first distribution. Okay, when you scroll down, you can look at their holdings. I never like these pages. That doesn't show you hardly much of anything, so I download the CSV. I've already done it. And then I like to sort it because it was a mess. But even from there, this isn't really much for you to look at. So I then take this. This is kind of the thing I do with my videos. I take this, I copy and paste it into a spreadsheet, add some colors, throw a little math in there, and give you something to look at. All right. Unfortunately, the way that it sorts is a little upside down. I would prefer the stock at the top and then the options below it, but for some reason, it just doesn't like that. Basically, because these numbers further down the line would come earlier than letters. So that's what's happening there. But when we look through, the gray is the actual underlying stock. There's roughly 4.5% in each of those. Numbers aren't going to necessarily work out perfect because you're going to have a bunch of negative percentages for any sold options. So I'm going to scroll. Actually, we'll just talk about them as we go. So what we're seeing is a lot of one of two strategies. Let me bring this back up. Option Strat's a great website. If you don't use it, you can build different options things and strategies and see all your different percentages and your profits and losses and things like that. But you also can get definitions of things. So we're going to see a whole lot of iron butterflies and iron condors. And this is the buying and selling of calls and puts at the same time. Sometimes the short option is at the same number. Those are iron butterflies. Others, it's out of the money on the call in the upward direction and in the put on the lower direction. Kind of surprised to see iron butterflies, but you're seeing a lot of that. So here's one right off the bat. Applied Digital, APLD, is the first one, and they are selling 100% of their available contracts. So if they've got 6,600 shares, they can sell 66 contracts, and that's what they're doing. You can see the sales are on the top and bottom, selling the 35 both ways, calls and puts, and then going another $5 out of the money in either direction on the other end of the spread. Next, you have AST Space Mobile, again an iron butterfly, selling calls and puts at 79 and then going another $10 in either direction on the buying and selling of the puts. And so that purchase of a put on the downside is what they're calling their downside protection or mitigation. Now, if they were only purchasing a put, not selling a put, then that's full downside protection, and that'd be more of a collar strategy. So that's not what they're doing, but they're limiting their downside, and they're limited on upside as well. That's just the way spreads work. Next, you have Bloom Energy, again selling the call and put at the same strike, and then going not quite the same spread on either side. That's going to be because a 153 probably wasn't available. You got 18 to 19% of the money in cash, just under $1 million. Circle Internet Group is the next one there. So in each case, they are buying the underlying. It's not a synthetic. They are actually buying the shares of the underlying and then selling the maximum amount of options off of that. Again, selling the call and the put at the same strike. It seems, it's odd because with that strategy, you can't win both ways. You have to win one and lose one. Now, technically, you could, if it barely moves, then the premium you brought in is going to offset the move. But any large move is going to have a definitive win and loss all at the same time. So, I don't know. Seems like it's going to be a lot of break-even strategies. So, Circle Internet Group, I think I said it already. Next, we have Clean Spark. Again, these are some familiar names we're used to hearing. These are high volatility names. Buying and selling the 18 call and put, and then the spreads in either direction. Core Scientific, another familiar name. Still Iron Butterflies. Figma, this one has recently been pulled out of ULTI. Again, at the same strike on the buys and sells, or on the sales of the calls and puts. Gemini Space Station, same thing. Iron Limited, same thing. 59 is the sold strike on both. Now Lemonade is just doing a call spread. So Lemonade sitting around $59. They sold the 60 and they purchased the 71. It's a $2 spread. This is odd. No, never mind. For some reason it put Lemonade right in the middle of it. So again, it's a typical of the other ones. It's a iron butterfly, buying and selling the call or selling the call and put at the same strike of 60. So it might be no iron condors. I thought I had seen some before I started the video, but I'm seeing nothing but iron butterflies right now. Marathon Digital, same thing, choosing 18 as the sold strike. Nebius Group, 127 is the sold strike. New Scale Power, 43. Yeah, so it's all of them. Rocket Lab, I think I saw some where they were out of order and it threw me off. Rocket Lab, again, familiar face, just like New Scale is, from what ULTI is trading. Sarepta Therapeutics, I have not heard of that one. Again, so if they buy 100,000 shares, they can sell 100 contracts. I'm sorry, if they buy 10,000 shares, they can sell 100 contracts. Choosing the 23 strike. Solar Edge Technologies, 34 is their sold strike price. So the difference is just going to be in how far of a spread they have on each option. They're not sticking to obviously the same dollar amount spread. And without having heard from them or talked to them, we don't know their exact goal, what they're shooting for. Sunrun Inc. is the next one. We've got Trade Desk selling the 49 call and put, going $9 in each direction on that spread. Upstart, another familiar face. We're looking at $45 strike price on the sold calls and puts. And then USA Rare Earth is the last one so far. Obviously, you're going to see some turnover in these. They are not going to just continue to trade these forever. If they drop in volatility, they will swap them out, or if they find others that are nice to trade, then they will add them in. $20 is the strike on that. Okay. Now they don't share quite as much information as we're used to seeing, right? We don't see their trades. Obviously, they just started, but they don't show share prices. So I literally had to put in a formula even to get the share prices on those. And these are all the prices as of this morning before the market opened. So if you're seeing any prices that are off, this is not a live time number. This is just based off of the values from their form. Okay, so we're gonna keep an eye on this one, see how they do trading wise, what kind of money they bring in, what kind of money they distribute. Now, if they're not gonna, we'll see if they're gonna start sharing their trades, but if they don't, we're not going to be able to necessarily keep an eye on how well they're doing, but you're going to be able to tell just by their share price, because if they are distributing more than they're making, their share price will drop. If they're underlyings are dropping faster than they're making money, it will drop as well. Now, obviously, income ETFs are going to tend to drop anyway, so that's kind of part of it. So down's not necessarily going to be the only factor. If it goes up, great. But all right, so brand new, just released today. I did want to come back to this. So Matt Holcomb is the portfolio manager. So you can see he was just posting that you can see everything inside the portfolio for ULTI here. He posted this morning, and I will be on a Spaces talk hosted by Ambassador of Quan on Saturday morning, where we're going to talk about this as well as KYLD. That comes from Curve Investments, and it's basically supposed to be their version of this as well. So there's a couple people jumping in the market looking to take down the fund ULTI from YieldMax, and we're gonna just take a look at their strategy, their trade, how they're set up, and what we think. So if you like this video, please give it a thumbs up, and if you like this type of content, please subscribe to the channel. I'll catch you in the next video. Have a good day.